So recording now. All right, so we'll go over the price action for the week. Now, as you can see, I already have this done, right? So preferably after we go through this, somebody shoot out a ticker, preferably a liquid ticker, that we can do the same exact thing with. Okay, and we'll do it in real time. But the overall idea here is that, sometimes, with all the things that we've shown in the group here, when you put them all together and you look at it from this lens, then it begins to kind of click, like, oh wow, okay, right? We always say if you can't back test it, there's no way you're going to be able to anticipate price into the future. So if you can begin to anticipate price, or I'm sorry, if you could begin to read price in, reverse, you will then begin to trust the concepts enough to use them for future price runs, right? That's the whole idea here. You want to get to a point where you can actually trade it, right? But you're not going to be able to do so unless you have an idea of what's going on, or how to actually read price. Okay, so we'll start back over here. This is the open of the week. Okay, so as I have it in purple, I've been using this as the new week open gap. Okay, and this is where we start. Okay, so as this overnight price action, now could I have added additional numbers here? Yes. I just didn't really feel like, because these numbers on TradingView, they stop at 10, so I actually had to manually do this one. But I just didn't feel like putting a million things, right? We can talk about all of this price action that's occurring inside of here, right? Think about it. Why would price reject here, right? If we really wanted to go over every single move, we could do that, no problem. Okay, and I'll actually leave this on just for the purpose of this. Okay, so in this overnight session, this is overnight on Sunday. Okay, you'll notice leaving behind relative equal lows, getting into a bearish imbalance, ultimately flushing that higher time frame liquidity. Okay, following that sweep, you will notice that we sweep this high right here. These are relative equal highs. Okay, and this is still before market even opens on Monday. Okay, swept the relative equal highs and we dump to start Monday. Okay, again, still higher time frame liquidity sweep. You'll notice then following that, what is the first thing that we would always wait for following the higher time frame liquidity sweep to imply that price is going to start moving in the inverse direction? The first imbalance. Okay, so here's that first imbalance forming. This is following the higher time frame sweep. Okay, aka odd nam. Even inside that first imbalance, price then works its way up through this bearish imbalance, rejects back down where? Into the first imbalance for your next run on highs. Now, at this point, this imbalance here, okay, or I should say a order block, this is actually a breaker block. Following the sweep of this high here, you now have a low, high, lower low, break up and through, and we would anticipate the high of this sequence to act as a support level moving forward. Now you could also say, well, there's an imbalance in here too. Yep, that just bolsters the thesis, right? But the main idea here is the breaker, and when we see the breakers, that's when we are anticipating reversals or strong types of moves following almost the breaker being the confirmation, if you will, that price is going to begin to move in the opposite direction. Okay, so here's price getting into the breaker, and here's price leaving said breaker. Price then makes its way and reclaims this new week open gap and chases liquidity here. Okay, following this sweep in liquidity, it is also worth noting, again, how many numbers do you want me to put on this thing? But we do have relative equal highs here and here. Okay, just worth noting. Okay, now when price sweeps this high, we then retrace lower. Okay, and in this overnight session, this was into today, and when we had live trading, we pretty much cranked this really nicely. Okay, but inside this overnight, we get down into discount of this bullish range. We then run up through highs. Now inside of this Mando model completion, okay, low, high, discount retracement into a bullish imbalance for ultimately a run through highs, again, to complete the model here on a 5-minute time frame. Now from this point, it is very important to note that, where are we here? Again, I just didn't want to put 50 million numbers. You could put even more if you want. Now it's important here to label our 1 through 5 a.m. highs and lows. Okay, that would be our London kill zone. Okay, 1 through 5. Okay, you will notice that we sweep the kill zone high. This is right after that 5 o'clock, so early, about 6 o'clock in the morning here. We sweep the high. Here is your first imbalance. That first imbalance is now suggesting that price ultimately needs to see what? The low of the London kill zone, which is here. There she blows. Bang! Okay? So inside this, we still have a London kill zone completion. Again, I can't put that many numbers, or nobody will even click to look at it. Okay? So now from this point, you'll notice that price gets back into the new week open gap, and this is right around when we got on live this morning. Okay? And the big focal point was, I don't really care about any of this action. I care about what happens inside this new week open gap. Ultimately, we sweep liquidity. This was also an hourly swing low. Sweeping that hourly swing low, ultimately creating the first imbalance to give us that run up through high, high, and that relative equal high that we discussed over here to complete yet again. Okay, so now from this point, we have our low, turtle soup, up to our high, bullish buy side swept. Here's that buy side target that we took out. This was from last week. Here is your discount retracement. Now, the ironic part about this was as well, we talked about this in the live session earlier today, that not only were we looking at this as a swing high from a smaller time frame perspective, but this is also an hourly imbalance. Now, I can pull it up here for you if you'd like. Here, okay, here's your hourly imbalance right there. Bang. And from that point, we were anticipating the retracement back down into that hourly imbalance, okay? Here's that discount retracement into said bullish imbalance. There is your final run up through highs to complete the Manda model one more time, okay? So this is what we got so far for this week. Now, the whole reason why I even did this or showed this to you is because I want to go through each one and just reiterate, nothing here is any voodoo magic that I haven't shown you guys yet, right? Everything here is something that I've shown you and that we've spent many, many times in our lives going over this type of information. We've talked about the new week open gap, right? And this was more so last year, but even starting into this year now, think about it. From, Q4 really was a pretty upward trajectory, right? The new week open gap to me did not play as much of a role because we were expanding to the upside ultimately to take out a lot of highs, and this was across the board, not just Nasdaq, okay? But now you're noticing that the new week open gap is really playing a huge role. Last week it was, and this week as well, as a pivot, okay? It's really what I'm looking at it, right? If we are below that level, then I'm anticipating that ultimately we have a lot of work cut out for us to kind of get back through. And the reason why there's so much importance to that is because, think about it, if we are below that new week open gap, our candle is painting red. If we're above that new week open gap, we're painting green. Okay, so again, we've talked about this many times, but just to reiterate that idea, right? Now, how about the higher time frame liquidity sweeps, right? We talk about time frame surfing all the time, being able to monitor multiple time frames at once and have an idea of where these key levels are. We're not talking about regular support, resistance, supply, demand, none of that. We're talking about higher time frame levels that we can identify that take 2 seconds to do the night before we even open up the computer for the next day, right? Now, how about this one? Damn, this has been the focal point of the 2025 mentorship thus far, right? The first imbalance following a higher time frame sweep, we're then looking for the retracement up to 50% of our given range. Now, we are working with a massive range right now, but this is just the idea behind it. When that first imbalance forms following the sweep of higher time frame liquidity, we're then looking for that retracement higher ultimately. Okay? Now, how about the breaker? I know I've done about 4 videos on the breaker. Low, high, lower low, break up and through. We would anticipate the high of that sequence to act as a support level moving forward for your bounce and your continuation type move. Okay, now from this point, buy side liquidity swept. I know I've talked about liquidity multiple times. That's in the beginner's guide, right? Following that liquidity sweep, I always say it, and I say it to be stupid so it sticks with you. One of 2 things are going to happen. We are either going to go up or we are going to go down. Okay, now let's dive deeper. Go up. What do I mean by that? If we're going to get that continuation type move, what are we anticipating happening, right? Just for reference, we took out this high here. What did we create in the process of taking out this high here? an imbalance. If you get that imbalance, you will get that continuation move to your next pool of liquidity. If you do not get that imbalance and you sweep liquidity, ultimately closing below that pool of liquidity, odds are you're probably going to retrace back down into discount, okay, which ultimately we do. Okay, even from this new week open gap bounce, we bounce here, right? Again, I could have labeled much more. I just didn't want to crowd it even more than I already did. Here's your bearish imbalance in discount of that bearish price run to get you into discount of the range right there. There's your flush down through it, deeper into discount, still maintaining this new week open gap to get you ultimately into a discount imbalance. Now, by this point, if you've been here for, I would say, more than 2 weeks, I hope that you're starting to understand this Mando model. That would be the main focal point of really this group. But here it is. Low, high, discount retracement, bullish imbalance for ultimately a run on highs, right? Beautiful. Mando model complete. Okay, I brought in with a little small London kill zone, which has also been a focal point of multiple videos throughout. That's also something that you can add in your bag. Now, here's the thing with the London kill zone, right? I don't know about you, but I was sleeping at 6 o'clock in the morning. I was not up for this, right? And that happens. But still, you were able to go immediately once you open up the screen. All right, let's see. Did we take out London highs? Did we take out London lows? Great, right? If you start to put that as a part of your morning regimen, you get a pretty good idea as to the overall flow on where price is ultimately going to deliver towards. Okay, so now from this point, again, we've talked about this multiple times too. Think about it. Sweeping liquidity in the inverse direction of your overarching trend. We've talked about internal range liquidity. That was really the focal point of, end of February into March, right? Internal range liquidity versus external range liquidity. Okay, inside of this current range, we are sweeping liquidity, right? This is not a market structure shift by any means, right? All we're doing here is taking liquidity to generate some moolah or gasoline for this vehicle to start going again. Okay, there's your next run up through buy side. Scroll on over a little bit. There it is. There's our next buy side target, right? You see that little swing high? And again, this was also that hourly imbalance that I showed you before on that hourly time frame. Okay? Following this, here's your shift in structure. You can have a bearish Mando model here too. And just another aspect of it. From your high down to your low. I know Jay hit this one earlier. High down to your low. Here's your discount retracement into a bearish imbalance for a flush down through lows. Why would you be looking bearish in that scenario? First imbalance formed, same thing as here, first imbalance formed inside of a range, and we didn't get down to discount yet. It's a fantastic trade, fantastic idea, right? Odd nam / Mando model, whichever way you want to slice this, okay? So following this, you get your drop down deep into discount, bullish imbalance, beautifully done. Okay, from this point, you then start making progress. Again, the first imbalance formed. Following, that is the golden ticket, if you will. There's the bullish imbalance to really suggest that price wants to make its way up for higher pools of liquidity, which in this case, there she blows. Why would price reject dead in its tracks right here? Look left, hourly imbalance, and also a smaller time frame 5-minute imbalance right there. Okay, beautiful. Okay, so nothing here, right? Nothing inside of all of this is anything that I haven't shown you guys already. All of the videos are there, right? To be the best, you really have to get into that mindset that you have to outwork your previous self. You have to put in the time to actually get better at this. This is not just going to happen overnight, right? I see people talking about it. They'll just join, and the first thing that they want to do is just mash all of the buttons, right? To me, that kind of defeats the purpose of being a part of this when you're trying to learn a new model and you think, is this really going to happen overnight? The harsh truth of it is definitely not. No. This takes time. But once you get down these very, very, basic concepts, you can then begin to build off of them, right? When you know what something is, then you'll begin to start seeing it, again, in hindsight. But if you can't see it in hindsight, you are not going to be able to start anticipating what price is going to do next, okay? And there was a few things, even, like I said, I added in a few little numbers like that we didn't exactly hit, but even here, right? Low, high, lower low, break up and through. This is a breaker. right here. Just add more to it, right? But there's so many layers on top of this, and when you can kind of combine multiple layers to your trade idea, you feel so much better about it. You're not sweating it, right? You're not going to be, you know, sweating out for that final draw on liquidity, unless you're trading 0 DTs and you don't have time. But you're going to have a much better idea as to where price is actually going. Once you get beyond that point, now it's a matter of managing it, and with time you get better at that as well, right? So those are just that's really just, you know, kind of the breakdown as to where we are currently, and you know, again, I just wanted to reiterate the that none of this is just, you know, it's not any like magic, you know, sauce that I haven't distributed throughout, right? All of this was pretty smooth, you know, and we talked it through earlier today, right? And of course, you know, you know, after the fact, it's going to look perfect. It always does, right? But when you're in the moment, right, you could still weigh possibilities in either direction, right? For example, this morning we were talking about, look, you know, from this point, all I care about is this new week open gap. And I really wish I recorded this morning, and I didn't. Stupid. But I don't really record the live tradings. But I really wish I did, because that was really the focal point from this point. Do we hold this new week open gap? If we hold this new week open gap, nothing changes here. If we fail this new week open gap, we're in some trouble. And I think that's a fair assessment to make. Now, we can go into an idea with that in mind. And once we're proven, what's the proof? Urgency to move higher. What is showing us urgency to move higher? The first imbalance forming, right? That was the one that we talked about while we were on live today. First imbalance shows us urgency to move higher. And that turned out to be an excellent price run. All right. So that's just the Nasdaq breakdown. Now, I wanted to do one where we'll do it together, and then we'll GTFO. All right. Microsoft, we could do Microsoft, or we could do MSTR. I wonder which one. Let's just see. Okay. So just right off the bat, just note that with stocks, right, we are working with less information, right? We don't have that overnight price action that's going to contribute, right? It's not the end of the world, but even still, we can look at Microsoft, and we'll take care of business here. So before, you know, obviously with Nasdaq, we've went over it 100 times. We went over it last night. So, you know, I had the higher time frame levels fresh in my mind and everything like that. Let's just do it together here. Just identify some key weekly levels going into this week. Okay, so we do have this bullish imbalance here. Okay, beautiful. And we did sweep a higher time frame low. We did leave behind relative equal lows. Okay, and here, ready? Boom. Okay, now just to be fair, it's worth noting we're going to have some buy side targets as well. So let's mark those out. And this is really the only one that I would be of concern from a weekly perspective. No problem. Let's work our way down. We'll go to the daily. Okay, from the daily time frame. Okay, should I even? I'm not going to mark this. This is a daily bearish fair value gap. Leave it as is. That's fine. Ready? I know we got one. So ready? Let's come to the 4. Okay, 4-hour imbalance right here. Bingo. Okay. Red. Okay. I'm actually going to remove this, knowing that we are in a weekly imbalance. I just don't want it to get too cluttered. Okay. Come on over to the hourly. Okay. Same old, same old. We're inside this 4-hour. We can break this 4-hour down into multiple hourly bearish fair value gaps. No problem. Okay. Come on over to your 5-minute, and this is where we'll get to work. Okay. So from this point, let's zoom out. Okay. So following this higher time frame sweep, again, this is our new week open gap right here. Pretty big one. Okay. That new week open gap is good for how many points here? Let's just see. I'm not going to leave this on because it's just going to get sloppy. $6 gap down to start the week. Okay. That leads us into our higher time frame sweep. Following the higher time frame sweep, what are we looking for to kind of imply that we're actually going to start moving in the opposite direction? Okay. the imbalance, right? Boom. Okay, let me note this. And I urge you guys to do this too, okay? New week open gap, okay? So this is our new week open gap. Pivot for the week, okay? Below this, we're painting a red candle. Above this, we're painting a green candle, okay? Just think of it like that. Now take a look at this candle here. This is the first candle, 9:30 on Monday, okay? And this is the actual candle to push us down through that higher time frame low that we had identified here, okay? With that, are there wicks on either side of that candle? Nope. That is going to be a bearish imbalance, okay? Price then, following the sweep, gets up into this bearish imbalance and rejects lower, okay? Taking out relative equal lows, okay? Again, all stuff that we talk about in here ad nauseum, okay? Now with that sweep of these lows, we also created a bearish imbalance, okay? And even if you wanted to do this, ready? Again, we're working on a small time frame. It plays high down to your low. Here's your discount retracement into a bearish imbalance. There's your flush down through lows to complete the Manda model, okay? Here's your next, from your high down to your low. Here's your discount retracement into a bearish imbalance. There is your flush down through lows, okay? Here's your next range. Immediately think to yourself, is there a discount bearish imbalance here? No discount bearish imbalance here. So what is that telling you? That when price ultimately starts, look, we could have expanded here, no problem, right? But if we don't have any imbalance here and price begins to make its way up, what is the indication there? This is not a Mando model. There's no bearish imbalance. This is not a Mando model whatsoever, okay? Remember, what's that first thing that we always talk about? I think it's first imbalance, aka odd nam, okay? First imbalance forms, okay? Boom. Again, higher time frame sweep, first imbalance, beautiful. We got something else here. We got something called a bullish breaker. Let's pull this up here. Low, high, lower low, break up and through. We would anticipate the high of that sequence to act as a support level moving forward. Bingo. Price gets in, price gets out, takes out buy side liquidity here. Boom. Okay. Now following the formation of the breaker, we have a new range. From your low up to your high. Here is a discount retracement into a bullish imbalance. Let me just zoom in a little bit more. There is your run through highs. That is the completion of the Manda model. Okay. Now from this point, you're going to notice price takes out this low right here. What is this? Sweep liquidity inside of a current bullish structure. Okay. Sweeping liquidity in the inverse direction of your overarching trend, aka turtle soup. Sweeping liquidity to ultimately set your next range. Low, high, discount retracement. Not only do you have that bullish imbalance here, but you have another right here. Okay, boom. There is your run through highs. Manda model complete. Low to your high. See how price reacts to this level as well? Just worth noting, right? Each one of these rejections, can we kind of justify that? Sure. We have a higher time frame level here, right? Higher time frame level that we're working on to get up and through. Ultimately, the draw is higher, right? Thank you. Here, higher time frame sweep, bullish imbalance. That kind of sets the stage for this type of move, okay? Now from your low up to your high, here is your discount retracement. Here is your bullish imbalance. There is your run through highs up into your new week open gap, okay? Here's your next range. From your low up to your high, here's your discount retracement to the tick into a bullish imbalance for a run through highs, okay? We're still operating inside of that new week open gap, okay? Just worth noting. from your low up to your high. Here is your discount retracement, sharp one, leading into open. Okay, not ideal. That is a bullish volume imbalance, gap up, price gets in, price gets out, Mando model complete, low up to your high. Here is your discount retracement. Here is your bullish imbalance. There is your run through highs, Mando model complete. Here is your low up to your high. Here's your discount retracement. Here is your bullish imbalance. There is your run through highs. Ain't that something? This is a beauty. I wish this one was on the radar. I wasn't even looking at this, but damn. So that is that's Microsoft. But again, really, what did we go over here, right? We talked about new week open gap. We talked about higher time frame liquidity. We talked about relative equal lows. We talked about a bullish breaker. We talked about odd NAM, first imbalance. We talked about the Mando model. We talked about turtle soup. We talked about getting into the new week open gap. And then from here, it was just like 6 straight Mando models that completed ultimately, right? To get you into what? Higher time frame level, which was your 4-hour imbalance right here. Okay? And to take out this buy side. So that is Microsoft. Beautiful moves altogether is right. There's a breaker in there, yep. Yeah, it is kind of like art, huh? I try to keep all the colors and stuff. No, not your boss. You're your own boss. Yep. You can, again, it's just, look, you can look at it all from one chart layout. To me, it's so much easier just to have multiple different layouts with key levels already done. But look, if you wanted to do it this way, you can do it, right? Or if you're in a pinch and, you're kind of scrolling through your watch list and maybe you see that higher time frame liquidity swept, or maybe you see a name is getting into that discount bullish imbalance or discount bearish imbalance, whichever way the overarching trend is, right? You can kind of just scroll through real fast, even on your phone. Just go through each time frame, mark out some of the key levels, and just operate as usual. But the most important thing, as always, is to identify what that higher time frame drawn liquidity is, right? Look, like what we're dealing with on a day-to-day inside, those smaller time frame fluctuations. Of course, so as we're sitting there staring at the screen, it feels like forever. But when in reality, if you have the right idea as to where price is going to draw towards, we would just anticipate the Mando model happening all over again, right? So, but anyways, I just wanted to do a quick one tonight and just go through this, right? When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon.